What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video, we're going to be going over the best entry model for fair value gaps, in my opinion, of course. I also have an announcement to make at the end of the video, so stay plugged in, man. This is going to be a good one. So all I have here is some basic drawings of the entry model itself. So there's really only three things that you guys have to make sure that you're paying attention to when it comes to this entry model, right? Number one, has liquidity been swept, right? If you guys don't understand liquidity, here's a little basic rundown. Liquidity is old highs, old lows, session highs, session lows, daily highs, daily lows, intermediate highs, intermediate lows, double tops, double bottoms. Like, liquidity is literally all over the place. So don't worry, I'm gonna give you guys a way to kind of filter out certain setups so that you guys won't be so confused when you're looking at the chart and taking, and always taking setups because, oh, liquidity is always being taken. Because guys, trust me when I tell you, liquidity is always being taken. But number one, there needs to be a sweep of liquidity, right? Number two, there has to be a market structure shift. Now, for those of you that don't understand a market structure shift, let me go ahead and go over it real quick because I don't want to lose anybody in this video. So what is a market structure shift? So guys, think about it like this. We're starting off in an uptrend, right? And that was a horrible start to an uptrend, but we're in an uptrend, right? In an uptrend, we are expecting highs to be broken. So what is a market structure shift? A market structure shift is when in an uptrend where we're expecting highs to be broken, we end up breaking a low. It is when there is a shift in market structure, quite literally. So in an uptrend, it is when a low is broken, right? And a downtrend is obviously going to be the opposite, right? If we're in a downtrend, we're expecting lows to be broken. So if all of a sudden in a downtrend, we end up breaking a high, that is also a market structure shift. So market structure shifts are very, simple to understand. They're not complicated whatsoever. They're also abbreviated as MSSs. So understand, guys, in an uptrend, a market structure shift is when a low is broken. In a downtrend is when a high is broken. Okay, simple enough, right? And the third and final thing you need to be looking for is a fair value gap, right? I've gone over fair value gaps multiple times. But real quick, once again, fair value gap. What is a fair value gap? It is a 3-candle sequence, guys. I'm showing you guys a bullish example. So just in your mind, right, for a bearish example, just flip it. But it is a 3-candle sequence, right? Candle 1, candle 2, candle 3. It is when the high of the first candle and the low of the third candle do not touch or overlap, right? That is a fair value gap, okay? For a bearish example, it's just flipped. It is when the low of the first candle and the high of the third candle do not touch or overlap, right? Very simple, very simple. So let's go ahead and get into a real trade example or a real chart example of this entry model. So the first setup we're going to be looking at today, guys, is going to be on US 30. Now, what is the way to filter out these setups? Now, I told you guys that liquidity is all over the place, and to keep you from, just losing your mind, seeing all these different levels being taken and you're looking for setups, how can you filter out which ones to take and which ones to just kind of dismiss? Well, this is what I do to help me filter out these setups. I'm only looking for these setups after yesterday's high, yesterday's low, a session high, or a session low has been swept. Those are the only 4 instances in which I am looking for these setups. So in this particular setup, we can see that yesterday's high has been taken. How do I know yesterday's high has been taken? Well, I use this indicator, yesterday's OHLC, right? Yesterday's open, high, low, closed, right? And the only things I have ticked on is yesterday's high and yesterday's low, right? So I can see clearly when yesterday's high or yesterday's low has been taken. So as we can see here, guys, we can see that yesterday's high was taken. So that's step number 1 complete. Now, what is step number 2? We are going to be looking for a market structure shift. Now, with these particular setups, guys, I love going to the 1-minute chart to kind of just give me that sniper entry. So let's drop down to the 1-minute chart and see if we can look at this market structure shift. So first things first, we see that we swept yesterday's high. So now all that we have to do is look for that market structure shift. Where do we get that market structure shift? We get that MSS happening right here, guys. That is when we shift in market structure. So now what do we have to do? All we have to do is wait for a fair value gap to form, which we get on the very next candle, right? the 3 candle sequence happens. Now, how will we enter? You would literally just enter at the opening of the fair value gap. You would enter at the fair value gap. Stop loss can go either above the fair value gap candle itself or above the 3 candle sequence. Or I know some people that would say just put it above the recent high, but in my opinion, and in my back testing, I found that, having it above the 3 candle sequence, you'll be just fine. Typically, if it goes above the 3 candle sequence, it's going to lose anyway. So I would have my stop loss above the 3 candle sequence itself. And now what's my targets? Well, your targets with this entry model, guys, is going to be opposing liquidity. So you would look to take out other lows, right? So this low over here comes to mind. That could be your TP1. Right, that would get you a little bit over a 1-to-1, get you about a 1 to 1.5, or you could take out this low as well, right? This could be your TP2 sitting over here, right? So all in all, you could be looking to target, on a great trade, right? A 31-point move here on US 30, only risking 10 points, right? So this strategy gives you a great risk to reward as well. So let's go ahead and play this out and see what happens, see if we get tapped in. So as you guys can see, man, you get tapped in and you end up hitting both your TPs. Right now, of course, you got a little scared because this candle did close very bullish. However, you guys can see that this setup worked out perfectly. Now let's go ahead and get into the second example that I have for you guys. So staying on the 1-minute chart, I have another example for you guys, and this time it's on EU, right? And the setup we are going to be looking at is a setup where we are looking at the sweep of a session high. So this little gray area sitting right here, I probably low-key should just change the color on these so you guys can see it a little bit better, which is, let me go ahead and do that right now. But okay, yeah, that's way more clear. So this gray area, this dark gray area is New York session, and this light gray area, guys, is going to be London session. So as we can see here, we get a sweep of London's high, right? We get a sweep of London's high. So that's step number 1 complete. Step number 2, we need to look for a market structure shift, which we get here right now. Being that we're on the 1-minute chart, guys, I will count a market structure shift with wicks. Now, if I'm on a higher time frame, I need bodies, but since I'm on the 1-minute chart, I will count a wick as, a market structure shift. But that's just my rule, my opinion. Some people may not count that, do whatever makes sense to you, but we get a market structure shift there. So now all we have to do is mark out our fair value gap, which we have here. And as you can see, guys, all you have to do is enter at the fair value gap, stop loss above the fair value gap candle itself or above the 3 candle sequence itself. And as you guys can see, this thing played out beautifully. I should have went in replay mode for this, but I mean, y'all see, man, it is what it is, bro. This thing played out beautifully. You could have targeted, this low sitting over here. That could have been your TP. That could have been one of your TPs. First TP or your break even point could have been at the break of this low. And I mean, guys, you can just see this strategy is very simple, very straightforward. And if you guys are noticing, you can see that I'm choosing examples that are happening this same week. Like, I'm not choosing examples that happened months ago or weeks ago. And that's what I try to do with all these videos. I try to show you guys examples that are current, right? So that you can see that I'm not just teaching you fluff, I'm teaching you things that happen on a daily basis. So for the next example, guys, we're going to be looking at a buying model, and it's going to be on UJ. Now, I want you guys to pay attention to what's happening here. Like I said, you want to pay attention to session highs, session lows, daily highs, daily lows. Well, if we look at this, right, let me zoom out a little bit. This light gray area, like I said before, is London session. The dark gray area is New York session. We can see that we get a sweep of London's low, right? So now what do we have to do? All we have to do is wait for a market structure shift. Let me go in replay mode, man, even though I know you guys see it played out already. But let me go in replay mode so that you guys can see this clearly. Where would our MSS occur? Our MSS would be at the break of this high. So once we get a break of that high, we're going to see if we have a fair value gap that we could then trade from, right? So let's play it out a little bit. So we get a break of that high, right? So now all we have to do is make sure that we have a fair value gap, which we do have right here. So the entry is the same, guys. You would enter at the opening of the fair value gap, stop loss below the 3 candle sequence. For me personally, if you want to be safe, you can have it below the low. But me personally, I'm having it below the 3 candle sequence. and my TP is going to be opposing liquidity, right? My TP is going to be opposing liquidity, which could be, this high sitting way up here, or maybe you didn't want to hold it for that long. Maybe you could have just targeted these, high sitting right here. But either way, it would have worked out anyway. So let's go ahead and play it out so you guys can see what happened. So as you guys can see, man, this whole little setup, it took about, 10:22. It took less than an hour to play out. So your TP got hit in less than an hour, guys. And I would just want you guys to see how simple and straightforward this strategy is. Like, it doesn't take much to it. You wait for a sweep of a relevant high or relevant low, right? For me personally, it's going to be daily highs, daily lows, session highs, session lows. You wait for the fair value, wait for the MSS, then you get the fair value gap, you enter, right? Stop loss is straightforward, TP is straightforward. Like, this strategy is so simple, guys. And I'm really just trying to give you the sauce so that you guys can, back test this and go, test it out before, Q1 for next year. Because 2024, guys, we got to change our situations, point blank, period. So I hope you guys got a clear understanding of this strategy, guys. I feel like it's very simple, very straightforward. Sweep of liquidity, market structure shift, fair value gap, enter, stop loss below the 3 candle sequence. TP is opposing liquidity, guys. And I mean, guys, it's really that simple. Now, as for the announcement goes, guys, at the end of the year, I am going to be hosting a webinar or a meeting or whatever you want to call it, but I'm gonna be hosting an event where I'm gonna be going over how to achieve your goals in 2024, right? Obviously, we're talking about trading, but what I talk about in that, session is going to apply to anything you're trying to do in 2024. It's going to be open to everyone in my Discord. So I have a free option and I have a premium option, but it's going to be open to anyone that's in the Discord, whether you paid or not. So I definitely want to get you guys in there because we're going to be going over how to accomplish your goals in 2024. And I also want to hear, some of you guys' goals and maybe help you guys, map out a game plan on how to achieve that goal. So you definitely want to make sure you're in the Discord, guys. If you're not in there already, if you're in there, shout out to you guys. And to those of you that joined after this video, I'm gonna see you guys in there and I'm gonna see you on Saturday. But that's all I got for this video, man. Of course, any questions that you guys have, definitely drop them in the comments. I typically reply to all the comments, but that's all I got for this video, guys. I'm gonna catch you in the next one. I'm gone.